going from here to Austin, Texas, and the slide has the happy face for their local economy because they think they're wonderful. So we're sitting around, we're sure that the national economy is terrible. 80% of you nationally would vote that we're in a recession. You'd be wrong, and y'all know, if you took any economics classes, you know that. 90% of you would say the economy is terrible. You'd be closer to right, but you know, that's another thing. But the U.S. Chamber, I spoke at their meeting in the top 100 chambers last week, and they had asked all businesses, their small business members in America, about the economy. 8% thought that the national economy was good, 27% thought their local economy was good, and 61% thought that their economy was good, just like y'all did. And I will tell you that every single community I go to votes exactly the same way y'all just voted. So I'm trying to figure out where the economy is. If the businesses think they're doing okay, and all the communities think they're doing okay, what is it that makes the national economy crazy? Why is it that everybody thinks the national economy is terrible if all the local economies are doing okay? And all the businesses are doing okay. So let's try to get a little perspective this morning on how this all works. Last decade was terrible. You know, the employment growth for the last decade was negative. In most states in the Southeast, you had huge growth in people and you had negative job growth. And that was after pretty good growth for 3 decades. GDP grew at about half the rate it's been growing. Not near what we expected. Everybody projected 40% growth, and it was below. Real household wealth dropped dramatically. In fact, went negative. So we were in a pretty bad mood. And then, oh, by the way, the recession came. And in the recession, poverty rates went up 15%, the highest since '93. African American poverty rates went to 27%. Male worker incomes fell to their 1973 level. So for the females in the room, your wages went up. Most of the rest of you, not so much good news. We started slowing down our growth rates. In fact, population growth is going to be impacted for the next 20, 30, 50 years by what's happened during the recession. Somebody mentioned this offhanded up here, but those educated metros grew much faster than those people that didn't have many college degrees. In fact, the brightest got bigger, and the less educated started shrinking. Government budgets were cut. Most people would say that was a good idea. It's reshaping the competitiveness. 5 years from now, 10 years from now, when you look up and you see where the transportation networks or the higher education or the school system or the whatever, pick your number. Not saying they shouldn't be cut, just saying that they've been cut very unevenly across the country and competitiveness will have shifted. And finally, oh, wait a minute, corporate profits were the highest share of GDP since 1950, and as you'll see later, last year, in the year that everybody thinks was the worst year in history, was the highest year for corporate profits in American history. That's why businesses don't think they're doing so bad. So, with full credit to TIP Strategies, which did this chart, I'd like to walk you through last decade's economy. This is where we started. If you're green, your job growing, the size of the bubbles count. This starts in 2002. You can see down in Charleston, you've got a little green dot, but big growth in Florida and Arizona, the Northeast, and California. As you're moving through the year, you're in 2004 now. This is 2005, excuse me. That's Katrina. Katrina, big job losses all in the New Orleans area. You see Detroit up in the top starting to lose jobs. That's the red bubble up on the lakes. Everybody's going pretty good. We're moving along. Detroit still remains a problem. You start to see a few more red dots in the upper Midwest because Detroit's starting to spread. And then all of a sudden you start seeing some little red dots in Florida, and then they start popping up in Arizona, California. Subprime mortgages start crashing. Texas is still growing. The Northeast is still growing. People are starting to lose jobs. Atlanta's having a bad time. Chicago's having a bad time. You're now going through 2007-8. We're now finishing 2009, moving into 2010. Job losses start reducing. They reduce everywhere. The Northeast starts growing, Chicago starts growing, Texas starts growing. And as we move into 2011, the country's stabilized, but the bubbles are a lot smaller than they were before we started. In a glass that is filled halfway with water in an ounce glass, you have 4 ounces. And you can argue with your friends and your wife and your children and your teenage children, which we know what that would come out, on whether that's half empty or half full. But the fact is there's 4 ounces, so let's deal with some 4-ounce figures. Let's start globally, work our way down. Unemployment rate in the U.S. is 9.1%. It's higher in the European Union. It's higher in India. It's lower in some other places. It was at 10. It's down to 9. 9's terrible, but it's going the right direction. GDP growth is projected next year at 1.6. 8 months ago, it was projected for this coming year at 2.6. So it's been contracting. All the economists are running backwards. Can you sustain 1.6% growth? Not in American history. Every time growth has been consistently under 2% for any period of time in American history, it's been a recession. So are we going to have a double-dip recession? Nothing about the last 3 years has followed any previous rules. So all the economists who say, well, it's never did this before, they can make a list of all the it's never did this before. So who knows? Interesting question would be whether anyone would notice if it went to a recession, since actually incomes fell more in the recovery than they fell during the recession. So, this could be one of those recessions where 8 months from now someone says, hey, we were in a recession in the middle of 2011, and everybody goes, really? Well, it seemed terrible anyway, so we move forward. Trade balance is better. We're at a negative 3.3% trade balance, but exports are actually up 42% over the last period of time. We'll come back to that in a few minutes. And exports and imports have continued to rise. A little break in 2009, but have continued to move up. 42% exports is one of the key factors. Last night there was a manufacturing group in this room, and I can tell you that's their lifeblood as they move forward. Only 1% of U.S. firms export, and of those, half of them only export to one country. This is the future of America, is figuring out how to sell other people our stuff. Exports per capita in the South, you're the yellow bar up there. You're not the highest, but South Carolina is well represented in terms of exports. It's one of the higher export states in the country. Import helps. And if you look at the South Carolina regions, Charleston gets less than 10% of its GDP from exports, whereas upstate gets almost 40% of their GDP from exports. Plenty of room to improve. My guess is a few things open up in the industrial world, you're going to improve big time real fast. Nationally, this is the ugliest chart I'll show you, also the most depressing. This is the last 10 years, and this is job growth in the United States by month. And so you see, this goes back to 2000, and for those of you, I'm going to peek over at this, and if you look over here, this is the first recession in the early part of the decade. These were the good times, and I say that with some quotes. The Great Recession over here. When you move over here, the one spike behind my pointer is when we hired a bunch of census workers, and the spike down is when we fired them. So, you know. It is. It's what it looks like on the chart. It's crazy. Everybody looks at it and goes, ooh, that was a good month. You say, well, not exactly. So. But as you can see, the last group of a year and a half has been muddled. Muddling is the right way to put it. It takes about 125,000 jobs per month to take care of the people entering the workforce. Now that number is going to get revised up pretty soon because all the old codgers aren't retiring. So it's actually going to end up taking about 150,000 jobs a month, but we'll leave it 125 for now. So let's imagine the best year that we've had in the last decade, which would be this little year in the middle here, between 12-month period, 2005, 2006. Were we able to sustain that growth and replace our current people? We need 208,000 jobs per month just to sustain. That's the best we've done over the last decade, 208,000 a month. If we get 208,000 a month, for the next 12 years, we get back to where we started. Now, that little red line is the 2008. So we need change. We need a massive shift in the way America focuses on our industrial policy, our manufacturing, and our exports because we have to grow. And oh, by the way, we're not having many children, so we're not going to grow by population. We have to grow by servicing other people's population growth. In the last 12 months, it's been Not good if you're investing in real estate, I don't believe. I think the numbers should be a little bit higher, maybe 1 or 1.5%. Some of the sectors that have been growing have been manufacturing, business, professional services, and education. And it's tempered by losing government jobs. We're constricting at so far mostly state and local government jobs, eventually federal government jobs. So that'll take money out of the economy over time, and hopefully will cause more, because the lower debt will cause more growth in the other sectors. 44 of the 50 states had job growth last year. Biggest gainers were Texas, California, New York, and Ohio. It helps to be that those are the 4 biggest states. 6 of the states that lost jobs, only 2 in the South, Georgia and Alabama. And Georgia's a continuing problem in the South. I'll show you some numbers on that. Some good news for you. Personal income savings. We used to be at 1%. We used to be at 8%, but over the last 10 years, we were not saving. Everybody said, we've got to find a way to get Americans to save more. Well, we did. We scared them to death. And so now they're taking 5% they're saving, and I have no idea what they're doing with it. I hope it's in the stock market, bond market, real estate, mattress. I don't know what they're doing, but they're at 5%. And interestingly enough, when you're growing at 2.5% a year, and you take 5% of consumption out of the economy, with consumption being 2/3 of the economy, then that basically stops you for a year and a half. So getting that growth back up, this good news also hurts. Retail sales, which you can see this little drop over here, that's the recession. We quit buying everything until things settled down. But since then, growth has gone back up. We recalculated the graph line, but the shape of the graph looks about the same. People have gone back to work. By the way, this morning at 8:30, for those of you who have not read it on your Twitter account already, new numbers came out for housing. Housing this month is up 10% from last year, 15% from last month, new housing starts. It's been creeping its way back up, slow but sure, with a price point that's lower. Very similar to the retail story you heard. Retail's growing, but the prices are a little bit lower. U.S. still has 536 of the Forbes 2000 in America. That's down from a few years ago as the rest of the world catches up. But when you think we're 5% of the world economy, 5% of the world population, and we have 1/4 of the top 2,000 firms in the world, that's not too bad. Last year was a great year for those firms. Income, profits for them rose 69%. Jobs rose 2%. Now, anybody who's taken the economics knows the two are not necessarily connected. Profits don't come about. In fact, in America, the 2 things we listen to every night on the news are the stock market up X amount per day. We'll talk about that in a minute. And the unemployment rate being what it is. Those are the only 2 things most Americans listen to. They're inversely related. As unemployment goes up, as unemployment gets better, stocks get worse and vice versa, and they've been inversely related forever. So Americans are always torn on what's happening with the economy. Overall, last year was either the first or second most profitable year in American business, depending on which report you read, but wasn't a bad year. It was a great year for almost all businesses. They just didn't hire people. If they'd hired people, we'd be out of recovery. We'd be, out of the recession recovery and on to just thinking life was normal again. The stock market, those are the numbers. Stock market, if you go back to 2001 and draw a line that's a regular growth line, then we're about where we're supposed to be. Yes, that big thing in the middle is a massive bubble, and that big trough is a correction of a massive bubble. But that's a fairly normal line for the stock market. How many of you are back in the stock market? Yeah? No, you should have been down there. This is when you should have got back in, right? There. Should have bought. Regionally, these are the best performing metros in America. That is 100 top metros. The blue ones are the best performing. Lucky for me, I get to go to Texas this afternoon. All blues. This is Charleston over here, and as you can see in South Carolina, you've got a real mix, as does North Carolina. Most of the South does. Some metros doing very well, some metros not doing so well. It's interesting, I think, that if you look at the 100 top metros, some of the best performing are in the Northeast and Upper Midwest. If I'd asked you what the economy was like in the Northeast or Upper Midwest, you'd probably give them a D. change the graph for you for a second. This is percentage growth. If you look at the percentage growth for South Carolina, about 1% growth. The high marks are 2.5%, so you're not one of the fastest growing places. Again, this is state. We'll talk about metro in a minute. Big states in the South, like North Carolina, only growing at 0.1%. Georgia actually still losing jobs. So overall, the South's, you know, if you take Texas out of the South, it's not a happy. Oklahoma's up there with growth. But if you look at the big growth ones, by the way, is Kentucky, Louisiana, Oklahoma, and Texas. What do they have in common? Energy. Yeah, that's right. They're the energy states, and energy prices rose, and life went good. Everybody else trying to find their new footing. If you look at metro areas, and Charleston is the one over here, this is manufacturing employment growth, almost a 4% jump over the last year in Charleston for manufacturing growth. You can see that some places still losing jobs. And by the way, we did agree that these would be available, so you can look at all the charts later on in specifics for you. But manufacturing growth overall pretty good in the South. Retail a little more mixed message, but again, you're over here on the